Dear students, I am Dr. Venkateswarlu, Assistant Professor in Accounts and Finance. In this video, I am going to dealing with journal entries. Before going to start journal entries, we must know about various rules of accounting. In general, before going to start the journal entries, every transaction recorded in books, accounting books, that transaction involved in personal account, in real account, and nominal account. For example, cash paid to Ramesh. Here, cash paid by us, our account, cash paid to Ramesh account. Two accounts are involved. One is our cash account is affected, and another one, Ramesh cash account is affected. So, a company will deal n number of transactions in a day. Before going to post it into journal, we should recognize which is debit and which is credit, as well as which is personal account, which is real account, and which is nominal account. Coming to personal account, natural person or a company. Persons names like Suresh, Ramesh, Ram. Companies names like JK Enterprises, Ashok Leyland, L&T, Ultratech, SBI, like KL University, Andhra University, like that. So company names or persons names comes under in personal account. Here the rule of personal account, debit the receiver and credit the giver. For example, cash paid to Ramesh. Here, Ramesh is the receiver. Now, Ramesh account that are to cash. Cash is we are paying. So two accounts are involved. Two accounts are affected. One is cash account, another one Ramesh account. Now, real account. Real account comes under in cash, property or assets like building, land, machinery, raw materials, and other things. So things like cash, property or assets. So here, debit what comes in, credit what goes out. So the rule is debit what comes in, credit what goes out. Coming to machinery purchased. In this transaction, cash we are going to pay. Why? Because whenever you purchase something, we have to pay something and we will receive the machinery or property. For example, machinery purchased for rupees 5 lakhs. Here cash account is affected, machinery account is affected. If machinery purchased in this transaction, machinery comes in, cash is going out. So now machinery account data to cash account. Like that we are deal. Next coming to nominal account. Nominal account regarding business expenses, losses, incomes and gains. So the rule is debit all expenses and losses, credit all incomes and gains. So for example, salary is paid. Salary is an expense paid to cash, paid through cash. So salary is paid for rupees 5 lakhs. So 5 lakhs rupees is cash account, salaries is the expenses account. So debit all expenses comes to salaries account data to cash account. Like that we are divided. So coming to format of journal. Journal consisting of a day, a particular, ledger folio, debit and credit. So date we will mention the day-wise transaction. Particulars we will divide into debit and credit. Narration after dividing, then a brief explanation we have to give, so and so what. So narration like being or for R2 we are using. So now coming to journal entry. For this transaction, January 1st, 2004, Saravanan started business with rupees 1 lakh. So in this transaction happens in January 1st, 2004. So in this transaction, Saravanan is a person started business with 1 lakh. So 1 lakh is the cash. So 1 lakh is the cash. So it comes under in real account. Saravanan is a person. It comes under in personal account. So now Saravanan take money from his cash account, invested money in business. So under real account, the cash is added to business. Saravanan deducted money from his account. In this transaction, determine two accounts involved in the transaction. So one is cash account, another one capital account. So Saravanan start business with the 1 lakh capital account. Step 2, classify the account under personal, real or nominal. Actually, cash is comes under in real account, capital is comes under in personal account. So according to the real account, debit what comes in. According to personal account, credit the giver. Here, Saravanan put the money, invest the money in business. So he is the giver according to personal account. Saravanan is a person. Now cash is the real account. According to the real account, debit what comes in. Actually, money from Saravanan account to business account. Debit what comes in. So now the transaction like cash account data to capital account. So the particulars column filled with cash account data to capital account. After classifying with the cash account and capital account like that. Then narration, the amount invested in business. So debit side 1 lakh, credit side 1 lakh. That is the journal. For example, take example 2. On 1st June 2016, goods sold for rupees 2000. So whenever you sold the goods, it will minus to your account. And cash will be comes from others. So here buyer will pay the cash. Here seller, we are send the goods to others. Now according to real account, because of real account, goods are comes under in real account. Here cash involved, cash is comes under in real account. So real account formula is debit what comes in, credit what goes out. So whenever sold, you sold something, you will receive cash. So now real account formula, debit what comes in. So cash account data. Then goods are going out. Real account formula, debit what comes in, credit what goes out. So if you are sold something, it will be going out. So cash account data to sales, 2000. So narration being cash sales to Mr. X, like that. So in the second transaction, on 2nd June 2016, goods purchased from XYZ Limited. So in this transaction, XYZ involved. XYZ is a personal account. Goods is the real account. Two accounts are involved. Goods purchased from XYZ. So here XYZ, debit the receiver, credit the giver. So personal account formula, XYZ is the giver. That's why debit the receiver, credit the giver. So XYZ is the giver. So purchase, goods purchase. Goods is the real account. In the real account, debit what comes in, credit what goes out. So whenever you purchase something, purchases will be debit. Why? Because according to real account, debit what comes in. So goods are received by purchase, goods account. So purchase account data to XYZ Limited. Credit purchase from XYZ. So here, for example, if the transaction happens through cash, not by XYZ. So now, one real account, cash, real account, two real accounts. So simply purchase account data to cash, not mention XYZ. But here in the goods, here the transaction happens through credit. That's why we must mention XYZ. Now, next example. So paid wages. Here wages means wages are expenses to the company. So according to the nominal account, all expenses losses are debit. All incomes and gains are credit. So now wages is an expense, cash is a real account. So all expenses are debit. Now wages account data to whenever you paid something, it's will left from our company, minus to our company. So debit what goes out, debit what comes in, credit what goes out. So now wages account data to cash. Let's see wages account data to cash. So wages is an expense. That's why according to nominal account, wages is the debit. So cash account. Why? Because cash is whenever you paid the wages, cash is minus to our company. Debit what comes in, credit what goes out. So being the amount of cash paid towards wage. Now paid rent by check 10,000. So rent is a nominal account. Rent is an expense. So now whenever the transaction happens through check always dealt by bank. So now we are using the word bank here. So rent is the expense. So now all expenses are debit. Rent account data by bank account. Why? Because bank is dealt by, bank is paid rent through check. Now the transaction rent paid account data to bank account. So that is the thing. Now paid salaries to Mr. Charan. So salaries is the nominal account, cash is the real account. So according to the nominal account, all expenses are debit. Salaries account data are to cash. Why cash is a credit? If according to the nominal account, credit what goes out. So one nominal account, one real account. So nominal account salaries are debit. According to the real account, debit what, credit what goes out. So cash account. Let's see the entry, salaries account data to cash. So now let's see the issue, received interest 14,000. So interest received, it is an income to the company. Now interest are something paid by the bank in general. So now according to the real account, debit what comes in, credit what goes out. But here received interest is received, so it is an income. According to the nominal account, income, all expenses and losses are debit, all incomes and gains are credit. So now bank account data to interest received account. Now cash account data to interest received account. So in this way, you can prepare the journal entries. So thank you.